Aaron, here's the important thing. If the bulls are right now we may have 1/4 of weakness and fluttering from some of these banks and brokerages. If this turns around quickly, this could be one of the great buying opportunities for select numbers of financials that we've seen in a number of years. Aaron?
All right, you know, that is a perfect segue to what we're about to talk about, Bob Pisani. With the Dow down more than 900 points from its peak, you've got to find out if stocks are starting to get cheap. Is now the time to fight the tape and start buying. Tim Hartzell is Chief Investment Officer of Canale Trust Company. He has $2 billion in assets there. Mark Henneman is co-manager of the Mayors and Power Growth Fund. It is a 4-star rated Morningstar fund, has just $3 billion in assets under management. And let me begin with you, Mark, because Bob Pisani was starting off saying maybe if you are brave, very, very brave, it's time to jump in, take the plunge on financials. And I think your best idea right now is actually, your two best ideas right now are financials.
Well, that's right. I mean, we're finding some great opportunities in financial services. I would say that we're definitely long-term bulls on the sector.
All right. And your names are Wells Fargo.
Yeah, the names that we're focused on are the companies that we've got the most confidence in, that they'll be able to weather the storm of the credit problems. So not necessarily the companies that have been hit the hardest, the stocks that are down the most, but the ones that we've got the greatest confidence in. Wells Fargo, we think will perform quite well through this tough period.
All right, Tim, I notice on your list I don't see anything financial, unless I'm looking at the financing arm of Caterpillar, maybe.
All right.
As a stretch.
Yeah, no, we're still staying with what we perceive to be the growth side of the story, and that's what we export, the international markets, and that's why you see the names on our list are more Caterpillar and 3M. We see that more as the growth side.
All right, so Caterpillar and 3M. You also, if I believe Tim, can talk here about some things you specifically do not like, and you've got two cells in technology. One of them is going to give Kramer a conniption. I'm just warning the viewers who know Kramer's loves. You don't like a name that begins with C and has 4 letters.
Well, to set this up, we've owned Cisco and Microsoft for a long time now, and what we're actually looking at maybe doing is rolling out of those names into different names as we see going forward. Of course, Microsoft's had the rollout of Vista, and we've been trying to stay invested in the stock until that has completely played out. So we'll be using those two names, and Cisco as well, as we can now start to sell a stock that's making new highs.
All right, so getting out of Cisco, getting out of Microsoft, and in exchange, it looks like getting into Dell.
Right, buying Dell, and also a more macro-type play, because we're seeing across all the market capitalizations growth starting to take a leadership role over value. So just recently we've started to increase initial footstep into the index, the growth index.
All right, Mark, last to you, and I guess just as a joke here, let's give Kramer a real heart attack since we just said sell Cisco. You're saying avoid the aerospace stocks.
Yeah, well, given the fact that we're very long-term focused, I would recognize the fact that companies like Honeywell and Boeing have done an excellent job here, and we think that their stocks reflect that, and would be trimming back on companies like that to reallocate capital into the more attractive valuations, in particular the financial services stocks.
All right, brave souls. Tim and Mark, thanks to both.
Thank you.